Good morning, Bob.
Good morning, Bill.
It's the Monday morning before Thanksgiving.
Happy Turkey Day.
And well, are we going to have a turkey or are we going to have a golden goose? And so let's talk about the turkey. Let's talk about a golden goose and a turkey. How is all of this amnesty program going to work into the mortgage market? Is it going to be a turkey or a golden goose for lenders?
Well, I guess the truth is most of the amnesty is applying to people who have already been here, an active participant in the economy. So it makes it easier for them to participate in the economy and easier to buy a house and all of those things.
Everybody wants a nice cookie cutter answer, especially for complex topics like immigration.
Right.
It's a very complex topic. You have two extremes. You have people that come to this country that have no jobs, very few skills, they don't know the language, and you have people at the other extreme, which they're highly educated, they're fluent in the language, they're some of the best and the brightest from their native country. They come over here and get educated in our colleges and universities. And in fact, Jim Barksdale is quoted, he's a famous Ole Miss graduate, former CEO of Netscape. He's been quoted as saying we should staple a green card to every person that gets a graduate degree from a foreign country in a technical field from a respected university.
Yeah. Well,
what do you think about that?
Well, I think that those are very talented people that we hate to lose.
We got to keep them.
This economy in our country has been founded, and developed in large part by many of the immigrants that have come here. And there is historically a culture of striving and succeeding among immigrant families. And much of the amnesty that's being proposed is for the children of immigrants, people who came over here illegally, have children in this country. Technically, they're citizens, and if their parents don't get amnesty, the whole family is likely to be shipped away.
Is the American dream still alive? Part of the American dream is owning a home. Part of the American dream is getting a good job. Is the American dream still alive?
Well, I think that there's a new American dream.
So this is the new normal?
I guess so. Yeah.
Well, can they get a mortgage? I mean, if an immigrant has a job, if they go to school, they work hard, they get a good job, can they get a good mortgage?
Well, you would think they could, but if they don't have, if they're an illegal
if they're illegal, they probably can't.
That's going to be a problem.
So now that we make them legal, now I'm not sure we make them legal or we just delay or forego deportation.
Well, that's currently the proposal, is just that they're not going to be deported. Okay, so that's going to open up the window for going through some sort of immigration process.
And so ultimately you would think that would lead to more home ownership, at least in raw numbers.
That's correct.
Maybe not on a percentage basis, but certainly in raw numbers. And so you would think there would be greater demand, would create greater demand for housing.
Right. Which is all good, but it's a sensitive political issue.
You wondered how I was going to tie immigration into housing, weren't you?
Yeah.
Well, I mean, it's a question that people in housing ask, and that is, what's that going to do? We got to do something to jumpstart.
Well, I think that one of the arguments against allowing the immigrants to come here is that there's this view that they're all on welfare and that it's just
take jobs from Americans.
Taking jobs from Americans, and that it's a net negative for the country.
What do you think?
I totally disagree personally. I mean, it's certainly not the case.
Well, I'm assuming you're giving a professional opinion.
Absolutely.
Okay, well, not a personal opinion. You said personal, but I'm assuming it's a professional opinion. I mean, let's diagram that just a moment, because immigration is the topic of the day.
Right.
And so let's diagram that and talk about unemployment. And so if we look at unemployment, do we have unemployment in the skilled jobs? So let's talk about those two ends of the spectrum.
Well, I mean, certainly in some skilled jobs there's unemployment.
Is it because we don't have enough people to fill those jobs?
People get into it's called this, technical unemployment.
Or frictional, you're right.
And people get into arguments about that, but bottom line, we don't have really good numbers on a lot of those details, but We do know that employment has been coming down and that we have shortages of highly skilled people in certain things.
If you were a programmer, you could get a job.
You absolutely can get a job.
If you were an engineer, you can get a job.
Right.
I mean, you can.
Right, and
A good job.
even a broader scope, unemployment has been coming down. There's this concept of inflation neutral unemployment. In other words, if you have employment that is too low, the demand for those people drives up wages, which drives up cost, which causes inflation. But there is a level of unemployment that basically is neutral to
So
inflation.
demand gets to sort of reiterate that statement. Demand gets too high for that sector, whatever that
Right.
is. And so as a result, then wages go way up.
Right.
And a lot of times it's because of some structural imbalance. It takes a while to train those workers.
Exactly. Right now,
Computer programs are one example.
Exactly. Right now, unemployment in the U.S. is about 5.8%. The neutral level is somewhere between 5.2, and 5.5.
In other words, basically we're sort of in balance at that 5.2 to 5.5,
Right.
taking into account frictional and people moving around and that sort
Right.
of thing.
The unemployment is coming down. We expect that it'll be down into that inflation neutral area sometime in 2015. And at the current rate of unemployment dropping, we'll expect it to get back to the pre-crisis level of unemployment, which is lower than that, in early 2016.
So do you think the Fed, what implications does that have for the Fed? The Fed is looking at slack in the in the labor markets,
Right.
but we haven't seen wages go up appreciably.
Wages have been really slow to go up. They've been climbing a little bit less than 2% a year. And the historical average is about 3.5% per year. It's probably not going to worry the Fed at all until it gets above 3.5% per year. So we're way below that right now. Although recently we've seen some indications that the wages are starting to kick up a little bit.
Independent of that, there was an article out on the demand for bonds. There's not enough supply of bonds out there, so what's out there are being bid up and the yields are down. That's artificially depressing the yields. And I read an analyst report yesterday, or maybe it was this morning, I've lost track of time.
It's all blurry.
Exactly. When midnight occurs, it's sort of a blur. And it said that we're going to see depressed yields through 15 because of this big demand. The European Central Bank is buying bonds. You have Japan now, who looks like they may be falling back into recession, and they're buying bonds to prop up their economy. And so that is going to keep interest rates in this country, because of arbitrage, it's going to keep interest rates depressed probably through 15, even
Right.
if the Fed goes up.
Sounds like we need a active secondary market in
Well,
mortgage.
it does. and because it sounds like that there's going to be lots of demand out there for mortgage bonds as well as other types of bonds. The Fed has been pulling a lot out of the U.S. market.
Yeah, they have, and that's, of course, that's stopped now theoretically.
Well,
It's
theoretically,
not increasing.
It's not
anymore.
increasing, but
Right.
they're replacing. I mean,
Yeah,
they're
replacing,
rolling those
they're
over.
maintaining their level, and so yeah, that's absolutely true. And I think that one reason that the demand for the mortgage bonds is so high now is that there's a lot more confidence in the way the mortgages are being originated. These credit process is much more substantial now than it used to be with the increased regulatory oversight. Banks are putting in a lot more structure around their exposure and their credit.
Actually underwriting loans and eyeballing, checking, verifying, documenting, really going through the process, not just giving them a lick and a kiss and the stamp of approval and going on.
Strange concept.
It is a strange concept. It's like back to 1999.
Yeah.
And so, well, I wasn't going to say 84, but some people couldn't relate.
Yeah, I know.
So
Too far back.
Exactly. So basically, what we have going on is a clean book. We have a lot of demand for these mortgages in the marketplace, and as you know, Fannie and Freddie essentially in most markets only go up to 417.
Right.
And so we see a lot of houses worth more than that, mortgages higher than that, and so there's a big demand for these jumbo loans.
And you know, as the unemployment goes down, another big thing that's happening right now that's going to probably increase demand is that gas prices have come down. I saw an article this morning that said that If you look at the amount of driving that occurred last year and applied it now to the current oil price, it's an overall savings to U.S. consumers of over $100 billion.
Awesome.
Do you think they'll spend it on something?
It burns a hole in your pocket.
Christmas is coming.
And speaking of burning a hole in your pocket, our time has burned through our pocket. We're out of time. We wish you all a happy Thanksgiving. This is FNC's Morning View. I'm Bill Rayburn. Bob, you have a happy turkey day.
You too, Bill.
Gobble, gobble.